Morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Dion from Dion Talk. How you doing, buddy?
Howdy. I'm doing great. I'm ready for round 3, and I think at the after this video, I'm going to trick you into something.
Awesome. I love being tricked into stuff. What we're going to do here, folks, is we're going to pretend or ask ourselves, what would we do if our buy box, our markets, our individual markets, so not nationally, it doesn't really matter nationally, but our buy box where we're buying, what if it crashed 20, 25%? What if rents crash 20 or 25%? And we'll even pretend like the stock market crashes 20, 25%. What do we, Dion and Michael, do individually? Again, a lot of people are hoping for a deep, dark, nasty crash. So we're going to take it to our buy box, our market, and say, what would we do? So, Dion, where do you want to start?
So this kind of the idea came from some social media interaction I had this morning, where I was literally attacked for trying to encourage somebody to, say congratulations on buying a rental, and I was a horrible, evil person for doing that because everyone knows there's a crash coming. So if you buy now, you're going to lose. And people said,
I send out cards almost every day for people doing the work. Nice job. Congratulations. If you do the work and get a great deal, why shouldn't you be happy for them? That's just crazy.
Exactly. But it's I often forget that when I'm in one rental at a time, or the Three Amigos of FI, or the Tacoma FI group, our Facebook groups, basically, we feel part of the community.
Our people, yeah.
Real estate is a thing. If I'm in the Choose FI, the other podcast stuff, real estate is like 5%. It's all stocks. So when they were talking of the crash that's coming, and the few crashes that have happened in stocks in the last few years, I can understand. Because if you're not in real estate, you think, if my stock portfolio goes down, I couldn't buy real estate, so no one else could buy real estate. We see from our own perspective. If my stock portfolio went down, maybe I couldn't pay my rent. Like all of those things. So there's a lot of fear if you're tied to something that literally plays vertical pong, and you have to watch charts daily to see what's going on. Of course, that's like that. Real estate doesn't happen that way. But what would happen if prices go down 20%?
Yeah, remind people what markets you invest in. Let's get very specific.
So I'm in Washington State, not DC, so West Coast, and I invest specifically in 2 counties, Pierce and Thurston counties. I wouldn't own in King County if you gave it to me. There's some other counties in Washington I would own in, but those are the 2 that I invest in.
All right, so which I already forgot the names. What was one of them?
Pierce and Thurston County. So those counties have crashed 20%.
Yeah, Pierce County. Congratulations. Every duplex, every fourplex just crashed 25%, Dion, overnight. What do you do? What happened? Your entire portfolio is wrecked.
It's wrecked. I have to go back to work. There's a 1-minute clip for you. This is where I can really tell where somebody is either just starting the mental journey of learning about investing, because they say, well, oh no, you might be underwater on a mortgage. If you financed it with a 5% down, you're 95% leveraged, and now all of a sudden now it's down 20%. You owe 15% more than it's worth. Who cares? We didn't buy for equity. We want equity in case we ever had to sell, but a price reduction on your portfolio doesn't mean you have to sell. We don't have adjustable rate mortgages.
I mean, I'll give you a real example. So if people read my book, Olivia and I, or if you read our book, you will know that Olivia and I sold all our houses at the peak, which is awesome, but we 1031 into apartment buildings. There you go. That book right there. And I would say right at the depth of the crash, we had a negative net worth. We didn't matter. It just, they don't call the loans. They don't do this. They don't do that. So yeah, it was, it happened in real life. So not theory.
So that's the first thing to cover is it doesn't impact us because we don't care about net worth. Second, if there's a crash of 20%, I think a lot of the competition disappears because lending is going to get a lot tighter. So if your credit score isn't 790 or higher, I think, and you don't have really good reserves, maybe even more money to put down, debt to income ratio or rental history is going to eliminate a bunch of competition. So it's shopping time, just like anybody else would think. I'm making offers where prices are now. So if they go down 20%, I will be making offers then too. So it doesn't impact my what do you call it, shopping for real estate. I'm trying to think of the other impact on if prices go down.
Yeah. So for me, really, again, for people that are in the game like you and I and have gotten to this point, there's really two sides to it, right? There's what we own. As you said, it doesn't matter. Second thing to talk about, while Olivia and I had a negative net worth for probably, I don't know, 6, 9, 12 months, whatever that was, it came roaring back as stuff turned around, which the stuff's not going to zero, right? We haven't figured out, living in a car or a tent is a good thing, right? Shelter is right above food and water, right? So again, it will come back. Even in the depths of the Great Recession, it came back, and it came back roaring back. So there's that. Uh, then shopping, to your point, nothing changes. I look every day. I still look every day. I have my minimum yield, which I call average, and I only do great deals. To your point, great deals are easier in a crash. And I tell you this as a guy who bought aggressively for 4 years. Again, this is not theory. This is what I did. And folks watching this, the market, my buy box goes down 20%. People will run from Fresno. Oh my God, it's horrible. Who would ever buy there? It's terrible. It's the armpit of California. Blah, blah, blah. I'll be buying hand over fist because no competition. And oh, by the way, because I'm a better investor today, I'll buy with seller financing. I will put less down and own more shit. So bring it on. I can't wait.
So then the idea is, what happens if stocks crash 20%? How does that impact us? And so that when this comes up in the other groups that I interact with, because most of us don't talk about stocks so much, other than you learned a lesson, we're benefiting from it. So thanks for going through that. The fear is, if stocks crash 20%, maybe tenants get laid off because companies are losing value. So maybe they can't pay rent. Here's how Dion is impacted. I have planned for that. I have diversified my locations so that I'm not pulling tenants from any one type of company. My properties are more than 10 miles apart. I go for small multifamily instead of large apartment complexes, so I'm not pulling from one source. And then I diversified the tenant base. I keep about 1/3 military. Is stocks going to impact my military tenants getting paid? No. I keep about 1/3 working or retired. So working, I might have half of 1/3 of my portfolio impacted. Retired people are not impacted by stocks crashing, depending on how they retired. If they retired early on a stock portfolio, so maybe they could be too. And then 1/3 through the Section 8 program, which is not going to be impacted by a stock market crash. A total of a third could be impacted by a massive stock market crash. So I've planned for that, and that's how I've built my portfolio. So it doesn't make me have to go back to work.
Well, let's just talk about this, because again, I think that's a wonderful theory, but I've lived this. So I have practical experience. Whether you like it or not, this is just a fact. You can go look it up yourself. Generally speaking, renters don't have stock portfolios, right? So again, stock portfolios going down. They will work at companies, but again, they are often, in today's world, blue collar, at least my market. That's what they are. That's kind of the service sector is where a lot of my tenants are. And it's plentiful. Jobs are plentiful. So if they get laid off from here, they can go there. I think what might be impactful this time, Dion, is actually white collar layoffs, like where I live in the Silicon Valley, in Austin, in some kind of the higher end areas. There might be some impact in Class A, because again, the Class A stuff, Dion, back to your diversification, what are they building? Are they building a bunch of C-class stuff? No. In fact, C-class stuff's being converted to B or being torn down. So again, the affordable rental space is probably one of the safest places to be in the economy that we are in today. So it's when you just look at the fact that the pain is coming, it's coming after asset owners. That really, they don't have stock portfolios. They don't care if the S&P 500 goes down 50%. It's just it doesn't even hit their radar.
Right. And then so, I mean, a direct correlation to that, probably use that word wrong. That's okay. 2008 housing crash, stock market crash, pretty much crashed across the board. 2009, 10, 11, rents went up in my area.
Yeah, rents went up and tenant quality went up. Again, somebody who went through the crisis. You know, the worst time to be a landlord in my 20 some odd years? 2006. I can remember vividly 4 or 5 people that I declined applications because of income or credit buying a home. I want to ask you right now, how batshit crazy is that? That's how nutty the
Well, it
world
might
is.
lead to a crash.
It might. It just, if you have people that don't qualify for tenants actually owning a home with 100, who left the closing table with a check, because of course we have to give them a check so they can buy furniture. I mean, why wouldn't that make sense? Of course, that's wonderful. Crazy.
And for the last part of this video, the to use one of your words, the big bugaboo that I would be waiting for if I started this video and heard us talk about this. What does Michael Zuber or Dion McNeely do if rents drop 20%? And I'm going to say my quote that I always say anytime rents come up dropping. Since we started tracking the data in 1914, there has never been a 5-year period ever in which rents went down market-wide, not once. There have been some pockets, like when Detroit had the car manufacturers move away, or the dot-com crash hit Silicon Valley harder. So there are some areas that could be impacted, but market-wide, we've never seen it. But hypothetically, 20% rent drop. What does Zuber do?
So first and foremost, really nothing much changes, right? Given where my portfolio is today, we obviously cash flow a lot less because that's top line stuff. I probably really what I do is I start looking for over leveraged landlords, because there's a lot of people that would have bought apartments specifically, and probably I would actually go shopping for Class A apartments, which I've never done. Because again, Class A apartments, they need the highest rents. They're running on the lowest cap rates. Their NOI is the lowest. I would probably go shopping for Class A apartments, frankly, if rents fell 20%. And I, again, say this with experience. Some of my greatest purchases were not single family homes in the crash. They were apartment buildings in the crash. Because again, as I talk about in one rental at a time, there's a housing cycle and then there's a multifamily cycle, and they're not linked up. So let's just assume multifamily rent or all rents went down 20%. My houses will be fine. I think apartments would really struggle. Cap rates would go up. Debt to income. You would actually have banks foreclosing, right? Where residential loans you can't foreclose, you can foreclose on commercial loans, right? There's debt covenants and all of those things. So frankly, I go shopping. And then I just buy better, right? Always buy at existing rents, and if rents are down 20%, price has to come down. I'm a kid in a can. I probably, what I probably do is I probably do I probably raise 10 million bucks in private money, and buy a whole lot of apartment buildings, because there'd be so many people spanked. All these syndications would blow up. It would be amazing. That's what I would do.
So here's why I'm hoping people made it this far into the video and why I watch your content. So I've reached financial freedom. I made work optional. I have built a life that I would have dreamt about the first 40 years of my life. I'm super excited about what I've accomplished. But I'm watching your content and I have this, okay, here's what I would do if rents drop. And my answer, in a nutshell, before hearing yours, would be, I've structured my portfolio to handle up to a 50% rent decrease without having to go back to work. So a 20% decrease would mean I would save slower for the next investment. That would be the impact to my life. And then let me paraphrase what I just heard you say. I asked you, if there's a 20% rent decrease, what would Zuber do? And I want everyone to take a pen and paper and write down the sentence I'm about to say, because this is what Mike showed us. You basically said, oh my God, think of the opportunity. Exactly. Like even I didn't make that logic leap until I heard you say, I'd go shopping. Think of all the things that would be impacted by a renting, not what would happen to my cash flow? How have I protected my cash flow? All of the things that I thought as an investor, who I think I was successful, but I'm happy to be interacting with you because of thoughts like that. Yes, if there was a rent decrease, you did this in 2008 when you pivoted from single family because they were overvalued, and you went into multifamily because of all of the reasons that people lose those when they're planning on either rents staying flat or increasing, like some of the syndications we've seen in the last few years. So that was a golden nugget that you laid on the table. I'm hoping people pick it up and take it home with them.
Yeah, again, where there's great pain, there's great opportunity. And where there's the greatest pain, there's the greatest opportunity. And again, I say this as someone who did it. So this is not some theoretical hokey stuff. I bought single family homes in my market that were down 75%. And then as those started to come back, multifamily started to crack. We bought entire buildings 0% down. We bought entire buildings with a 50K cash reserve held at a bank. We bought a building seller financing. We bought a building that once sold for 1.44 for 700 grand, or I think it was 750. I think it was 750. I bring it on. 20% rent decrease would be amazing. I would love a 20% rent increase and a 20% drop in my market. Nothing changes in my portfolio. Go back to my channel. I've set all my debt up correctly. I've got all this dry powder, and I have a reputation. I know that in a 30-day period, Dion, I could raise $5 to $10 million, and I would go ham buying stuff because I know this would end. I know this would be a moment in time. One of the big things I had on my, I think I wrote this in my second book, 15 Conversations with Millionaires. I never wanted to be that investor that said, I wish I bought more. So we bought everything we could during the crash. I mortgaged, I don't know what it's called. I got a loan on my car, which was free and clear. I borrowed every penny from 401ks. Everything. So I can sit here today saying we got every deal done we could, right? And I would do it again. I would be so excited. The opportunity, it would be like, I'd be like, oh, that gold nugget's not big enough. I'm going to go find a bigger one. It would be amazing.
Awesome. I love it.
Dion, where can people find you?
Right here on YouTube, usually having my mind blown by Michael Zuber because of all the knowledge you share. I appreciate it. This is great. I do my live streams every Tuesday at 4 p.m. Pacific. And once in a while, I do a short live stream in the middle of the day, which is what I'm going to trick Mike into doing in about 3 minutes.
Awesome. I look forward to it. Thanks.